Welcome, and thank you for joining us for our Ask the Expert session. I'm Laura Gilsdorf, Realtor with Madison and Company, based out of Evergreen, Colorado, but I service the entire Front Range. And with me is...
Hi, I'm Leanne Merciez with Universal Lending, a mortgage banker, and I service all of Colorado, Arizona, and soon to be Texas.
Yeah, you mentioned that previously. When has that become official for you?
I'm hoping by the end of this month.
Awesome. Yay. Well, we'll celebrate when it's time. So today I am going to talk about the top 5 things you need to know when you're a first-time home buyer or home seller, because first-time selling can also be a little scary and we don't talk about that as often. And Leanne, what are you going to talk about today?
I'm going to talk about just some different down payment options that we have, and also down payment assistance programs that are available.
Awesome. So without further ado, I will dive in, and Leanne, feel free to chime in wherever you see fit, but we'll start with buyers. So when you're becoming a first-time home buyer, there's always a lot to know, and it can be really overwhelming. And I work with a lot of them, and they just almost have like an innate hesitation to do anything, right? Because it seems so overwhelming. And so I really like to try to break things down as simple as possible, because it really doesn't have to be that overwhelming. There's a couple things you have to know from the get-go. And number one is what you're approved for. So anytime I'm engaged with a first-time home buyer and they talk to me first, either because they're out, doing an open house or something like that, that's always one of my first questions is, have you talked to somebody to know what you can afford? And I get lots of different answers, right? I'll get oh, I went to Quicken Loans, or I went to Zillow and they said I could afford this, or however they came up with their numbers. If it wasn't talking to a lender like Leanne, then that should be your first step. And it doesn't matter if you're buying a month from now, a year from now, however long you think it will be. If you're already having the thoughts, and we've said this in previous videos about what it looks like, or thinking about potentially buying a house, do that first so that we can come up with a game plan for you to know what you can afford and potentially what you have to do in order to get yourself there. So that's my first, is get pre-approved with a mortgage lender. Number 2 is going to be prepared for unexpected expenses when you're looking at all those finances. So you have to worry about closing costs, potential home repairs as soon as you get into the home, furnishing the home, moving costs, potential rental overages or anything like that. So when you're doing the financial review with a lender, just also be considering all of those other costs as well, because it's not just about the amount that you're going to give to the title company when you get to closing day. Anything on that, Leanne? Because I know you deal a lot in the finances. So
no, I think that's a good point. And, with a lot of my first-time home buyers, we actually do a budget worksheet where we go over not their current monthly budget, but also, hey, if you do purchase this house, how much extra do you think you need to furnish it? Or if you're moving from a condo to a house, your energy bill and water bill are all going to go up. So those are all things that I like to work with the first-time home buyers so they understand when they move in.
Yeah, and it also, one thing that has been coming up a lot more recently for me too is also planning for potentially a car purchase to go along with the home after, because for whatever reason, if they're moving further away or they're moving closer to the city, it sometimes changes those. Don't do that before you buy the home, but keep in mind all the things that are going into this lifestyle change, basically.
Yeah.
So my third is, once you've got the finances kind of narrowed down a little bit, this is the fun part, because you get to dream, you get to explore, you get to do your research about the market, about the neighborhood that you want to be in, about the type of house that you can be in your budget, and then start exploring and really have fun with this part is my biggest thing, because you are creating a lifestyle. You're not just buying a home. And almost in tandem with all of these things would be to hire a reputable real estate agent. So that's number 4 for buyers. You want somebody who you feel like you can trust, who knows their stuff, and somebody who can be a trusted advisor and a straight shooter, because sometimes things go awry in real estate, and you want somebody that is going to tell you like it is when you need to be told what exactly is going on and what your options are, and somebody who's going to have strong negotiating skills on your behalf when it comes to making that offer initially, when it comes to going through inspection, if there's any appraisal negotiations that have to happen. You want somebody by your side that you know is going to have your back through and through, and they're not just about the paycheck at the end of it. So for buyers, the 5th one and the final one, for me, it's to see as many homes or as few homes as you desire, but I really encourage you to not rely exclusively on what you see online, both on the good and the bad side, because sometimes you're going to see photos that are stellar and you're like, oh my God, I love this. And then you get into it and it's like, wait a second, this is not what I saw online. Or the reverse, maybe a house doesn't even have photos, or the photos were taken with an iPhone or something, and you steer away from it because it doesn't look glamorous, or it doesn't look like what you imagine these fancy real estate photos should look like. If it matches your criteria, I encourage you to still give it a chance, because you can sometimes find that diamond in the rough that everybody else is overlooking because the photos aren't good. So to be a savvy buyer, I think you got to get creative. You got to be willing to explore and expand your horizons a little bit. And then hopefully, like I said, you have a trusted advisor on your side that can navigate and figure out the details of each listing with you, because there are a lot of details. It's not just about the number of bedrooms, bathrooms, square footage, lot size. There's so many other details to the age of home, what comes with the home, are there tenants in the home, what kind of financing are they accepting, so on and so forth. So as you can tell, I could go on and on and on because there's so many details, but those would be my top 5. So get pre-approved, be aware of unexpected expenses, research where you want to be and what kind of house you want to be in, hire a reputable real estate agent, and really do your due diligence when you're exploring and out there in the market ready to make an offer. Anything you want to add before I move on to sellers?
No, I would also say, make sure you're open to other areas.
Mm-hmm. Good point. Good point. Excuse me, because sometimes buyers can get locked into a very narrow geographical area and get frustrated because they're not finding what they want to find.
Yeah.
And so if we're open a little bit to other ideas, then we can find potentially that perfect home just a little bit outside of their, map radius.
Absolutely.
So, good point. Okay, so for first-time home sellers, if you've never sold a home before, it can be a little overwhelming. And I sometimes also find that whatever their buying experience was really flavors and sets the stage for what their selling experience is going to be. Because a lot of first-time home sellers, I'll hear them say things like, oh, well, when I was a buyer, the seller did this. And when I was a buyer, the seller did that. Whether they liked it or didn't like it, it can really set the stage for how they feel they should show up as a home seller. So one thing, this isn't one of my 5, but something to keep in mind is try to erase your memory on what it was to be a home buyer when it's flavoring things negatively. Because as a home seller, the biggest thing I can recommend is being flexible, really trust the people around you, and think if you were a buyer, what kind of seller would you want to experience, regardless of whether you experience that as a buyer. But that's just my disclaimer, if you will. But the first thing to do is think about decluttering, deep cleaning your home, making it more appealing to potential buyers. And that also helps you get to better know what needs to be addressed in the home or not. Like, do you have paint chipping somewhere? Is there a water leak that you didn't know about that you need to tend to? Is there a busted appliance that needs to be replaced? Like, what is it? I find the decluttering process is not only for aesthetics, but also to really ensure that you know where the home's at from top to bottom. Number two is considering the pricing of your home. So I always recommend that sellers do their due diligence to set a price and to see what they think their home is actually worth, and compare that against what they want to get out of their home. And this is going to be really important as we move into point number three, which is when you're hiring your real estate agent, but also if you're working with a lender. Like, if you're selling to move on to another home, then this is a great time to get a lender involved as well, to say, okay, to make that move that you want to move, you need to get X amount of dollars. So why I like sellers to have an idea of their price when they're going in to hire a real estate agent, and why I put it in this order, because number three is hire a real estate agent. We as real estate agents do not set the price for you. That's not our job. And I want to make that really clear, because a lot of people think that that is our job. Our job is to give you all the information that is available to you, to your home, to your neighborhood, to your region. We make recommendations, but ultimately you as the seller set the price of your home. So if we come in and we're totally far off on our numbers, then I'll obviously give you all the data to say why we're far off, but you still set the price as a seller. Or if we're really close, then that's a win-win. And that's me saying, this is what the evidence shows. So I think this is reasonable for you to get for your home. So I'm going to give Leanne a chance here, because I've been talking a lot, but what do you have to say about like that piece of setting price and your involvement in that with sellers?
I would say that, I mean, if they're going to purchase a new home and use those proceeds, I never give any recommendations on what they should sell it for. They tell me usually, and then I look at how much they owe, and we come up with an estimate on how much they're going to have for in proceeds for their new purchase price. But yeah, I don't ever talk to them, and I don't think, I mean, I'm not the expert in that.
Yeah.
So.
Well, this is where we get to work together,
Yes.
right? For those sellers that are going on to buy and doing, doesn't matter if it's an upgrade or a downgrade, whatever it be, it's a partnership between the seller and the lender and the realtor to really create that best case scenario.
And you know, as we work together, you can call and say, okay, we're gonna get 10,000 less. What does that look like for their loan, or 20,000 more? So there's a lot of reasons we need to communicate from even when the seller's selling their home.
Yeah, exactly. Okay, so number 4 for first-time home sellers is to consider staging your home to showcase its potential. So one of the reasons, and it doesn't need full staging, but at least allowing your realtor to come in and give a very objective, non-emotional opinion about potentially rearranging furniture, taking art pieces, family photos, you name it, down, maybe removing certain pieces of furniture out and replacing them with a staged piece of furniture. I can say it's an expense that a lot of people don't typically want to take on, and I understand why, because the upfront costs don't always equate to, or there's no perfect equation to say, if I spend this, then it'll, you know, outcome in this. But imagine yourself as that buyer again, and you're looking at those photos, the sexy listings, the one that have the nice furniture and everything's, you know, put together, they get far more showings and far more offers. I don't have the data in front of me to tell you exactly what that is, but I know for certain that they get way more attention when there's actually time spent really putting your home at its best. I mean, I like to say it's kind of like dating. You're prepping your home for dating, the dating phase. You're getting ready to divorce your home, I don't know, or break up, you're moving on for whatever reason. And so you want to put your home's best foot forward. And just because we like something in our homes and how we have it decorated doesn't mean it's always going to translate. And it doesn't mean anything negative about you or your style either. It's just knowing what are buyers looking for and expecting and setting it up so that you get the highest return. And then quickly, number 5 is to consider your market and whether or not you might need to offer incentives like a home warranty or credits toward repairs or something of that nature to entice buyers, because not every market, not every neighborhood is receiving multiple offers first weekend. Some places we're still seeing listings sit for 2, 3, 4 weeks sometimes. So I always like to have those conversations on the front end, just in case interest isn't super high in the beginning. And then that way you already have your backup plan in your pocket to pull from in the case that you need to entice some buyers to come in. So those are my 5 for first-time home sellers. So it's declutter, consider your pricing, hire a real estate agent, consider staging, and then know what you might have to do in terms of enticing buyers so that when that time comes, you're ready for it.
Love it.
Yeah. So on to you, Leanne.
Yes, I just wanted to talk about when I work with first-time homebuyers, I think the biggest question I get first is how much down payment? And that is going to depend on a few things: how much you have saved, your income, your credit. So a conventional, we can do 3% down, as low as 3% down. FHA, we can do 3.5% down. And I think a lot of people get confused on the difference between conventional and FHA. The biggest difference: conventional has lower mortgage insurance. FHA has higher mortgage insurance, but allows for a lower credit score. But the good news is typically FHA has lower interest rates. So they're both very good programs for first-time home buyers. And then the second question I get is, well, what if I don't have 3% down? Or what if I don't have 3.5% down or 5% down? Then there are different down payment assistance programs that are available. And I'm not going to talk about each one specifically because each one is dependent on different factors. So in Denver, the 2 biggest ones that I would say we have here are called the Metro DPA and CHAFA. They each offer either a grant or a second mortgage. And down payment assistance programs are based on how much you make. So if you're making $200,000 a year, the chances of you qualifying for down payment assistance is going to be pretty slim, because most of them have income limits. So in this video, I'm going to post after this, we're going to post a link. We're going to post a link to the CHAFA website, but also to the website that will show you what the median income limits are for your area. So you can go ahead and type in your address and it'll say 80% AMI. And what that means is if you fall below that income limit, then most likely you are eligible for down payment assistance.
Cool. That makes it easy.
Yeah, it makes it really easy. And then CHAFA, which is nice, it allows for buyers to go above that. So we'll also post that link so you can see what their down payment assistance programs look like.
Awesome.
There's a new one out too that is a conventional program where the lender covers 2% and you just need to bring in 1%. So that's another down payment assistance that has a max loan amount of $350. I believe it's $350. So there are a whole bunch of different programs to help people get into homes, but they're specific to that person, to that individual. And also to that state, because not every state has the same down payment assistance programs out there. But that's what I look at. So our initial conversation really is talking about, what would you like your monthly payment to be? How much do you have saved? We go over budgeting. I think with first-time home buyers, what I notice the most, and anyone watching this, is no one sits down first to figure out how much payment they can afford monthly. Everyone starts out by looking at Zillow and everything, and looking at the homes that they like, but not figuring out how much they can afford. So a lot of times we end up working backwards. So my recommendation to anyone watching this video, if you're thinking about purchasing a home, really sit down and figure out what mortgage payment you're comfortable with.
Yeah.
Because if you're comfortable with a $2,000 mortgage payment, that might mean that you need a larger down payment. So we can plan on, okay, how long is that going to take you to save to get to that down payment that you'll need to keep your mortgage payment at $2,000. So
yeah, good point.
Yeah, that's my biggest pet peeve.
Yeah. And I'm curious, well, one thing I also see with first-time home buyers as the realtor is writing in seller concessions to the contract. Got a first-time home buyer right now, and working with his lender, we wrote in a seller credit to the offer that allowed him to keep a bunch of his cash, which I'm always a fan of. No matter what kind of buyer you are, if you can keep cash on hand for repairs or updates or whatever it be, just to keep cash, I'm a fan of it. You can tell me your opinion, Leanne, but how does that play into like knowing what your down payment will be and so on and so forth, if as a strategy?
That is a good strategy. So a lot of people do that to actually even cover closing costs. So on top of down payment, you're going to have closing costs. And it only can be a certain percentage depending on that you can get for seller concessions, depending on the loan program that you're picking. But it's a great strategy, and it really depends on the market right now. And to your point earlier, if a house is sitting for a while, then we might have the opportunity to put in the contract, $10,000 worth of seller concessions to help our borrowers or you save money during that transaction. So that is another thing that we can do. I just don't like to set that precedence right away, because sometimes it doesn't happen, especially if there's multiple offers. But to your point, if you're willing to look outside of an area or a home that's been sitting a while, there's definitely things that we can do to help save money and keep that money in the bank account.
Yeah, and I think the point here is there's lots of opportunity, lots of strategies, lots of different ways we can come to a number or support you with getting the best case scenario for your situation. Doesn't work all the time or for everyone, but there's lots of little tools we can pull out of our tool belt.
Yeah, and everyone is different. Everyone's income's different. Everyone's job's different. I mean, so to speak with a lender, number one, is so important, and someone that knows down payment assistance programs, that knows the different loan programs. And there's a USDA loans, FHA loans, VA loans. So, and what I like to bring up with VA is they can do 100% financing, so you don't even need a down payment. So someone that is familiar with all of the loans, and also, like you said earlier, not just a real estate agent for the check, but also a lender that cares. So if you want to purchase in a year, you want to talk to someone that's okay with that, and not someone that wants to push you into a mortgage right away, telling you, hey, interest rates are going to be up, this is going to happen, this is going to happen. It's your purchase, not our purchase. So we're just here to guide you.
Exactly. All right, cool. Well, I've got a couple questions on my end from some people. One, it seems like would be a great question for you, because you mentioned closing costs just a few minutes ago, but it was simply what are the closing costs associated with purchasing a home? I know buyers get very confused on that, especially first-time home buyers, because you hear a lot about down payment, but not a lot about closing costs.
The two largest closing costs are going to be your escrow setup. So that's your taxes and your homeowner's insurance. So at closing, your homeowner's insurance is paid 1 year in advance. And then they collect for taxes. So when your taxes are due, that you have enough in your escrow account to pay those taxes. The second largest item in closing costs are your title insurance fees. So every transaction goes through a title company. That title company charges for title policies, and that's probably a video that we can make exactly, you know, what that includes. But those are the two largest fees. Besides that, you're going to have your origination fee from a lender. Those vary, but usually, you know, between $900 and $1,300 are pretty standard across the board in Colorado and Arizona for origination fees. And those are the biggest chunk of your fees. Besides that, you're going to have transfer taxes and all the good stuff that, you know, the government wants to charge us, but those are just small compared to, you know, your escrow and your title insurance. Those are probably the two largest fees. And I had a question, you know, what usually what's like an estimate for closing costs? And I always tell people 2%. 2% of the purchase price is a pretty good estimate of what your closing costs are going to be.
Cool. So then you take your purchase price, take your down payment percentage, and then take 2% on top of that for your closing costs.
Yeah.
Pretty simple equation, at least to get some estimates.
Yeah, to get some estimates, or you can just talk to me and I can tell you exactly.
Exactly. So I had one other question, which is, how do I determine the value of my home? So I mentioned sellers going about that for themselves. The way I recommend is a couple of factors. So you can look at all the websites, Zillow, Realtor.com, the MLS, you know, what are you seeing that's happening around you? Because as a realtor, when I'm going to look at value, I'm looking at some pretty narrow parameters. And so I think knowing those parameters will be useful for anybody doing the same for themselves, but what is the size of the home? What type of home is it? Is it a ranch? Is it a duplex? Is it a single family 2-story? All of those things matter. And then I'm trying to find the most similar homes to that have sold within the last 90 days. A lot of times home sellers get really excited, especially in the market we've been in the last couple of years. And they're like, oh my God, so-and-so sold their home for $200,000 over what they purchased it for a year ago. So I should get that. That's not always the case. So you really want to look and see what's been happening in my market in the last 90 days. Some markets you have to go out a little bit further if there's not enough data, either in terms of time or in terms of distance. But as a general rule of thumb, I'm looking the last 90 days and within half a mile if it's a really populated area. If the homes are a little bit more dispersed, I might go 1 mile to 2 miles. But looking at homes that are similar type, similar square footage, similar beds and baths, and similar lot sizes, and then comparing against that to come up with a value. And the one that's a little tougher for most people to tell is condition. So how quality are the finishes? Is it, you know, a high-end contractor that came in and did it from top to bottom, or is it a total DIY throughout the home? Those things actually do matter in the value and the price, and can be the hardest part for a seller to be objective about, because whatever they've done with the home in the time that they've lived in it, they're often emotionally attached to it and have very high opinions of it. And so we just try to be as objective as possible and putting an eye on it as if I'm the standard buyer out in the market with zero attachment to any of these places. What do I see? So hopefully that helps for all you future home sellers out there. Okay, did you have any other questions today, Leanne?
No, I think that was it. Oh yeah, I did. So someone asked about mortgage insurance, and that's a very good question. Anytime you don't have 20% down, you pay mortgage insurance, except on VA, which that's why we love VA. You don't have mortgage insurance, and mortgage insurance is a multiplier, and it depends on your credit score and your debt to income. So that's where credit pays. Good credit pays out because you're going to pay less if you have good credit. You're going to pay more in mortgage insurance if you have bad credit.
Got it. Cool. Well, thanks for that. And I think that wraps us up for today. So I want to thank everybody for joining us and sitting through all the information. I'm always a fan, like I said in previous videos, the more you know, the better you're going to be as a buyer or a seller, especially with having realtor and lender partners by your side to guide you through the things that you don't know or the things that maybe get a little bit tricky. So if you want to stay on top of what is happening in real estate and lending, be sure to subscribe to our channel and click the link below where you can sign up to get reminders, and you can join us live as well. And as always, if you need anything at all, feel free to call, text, or email either one of us. We'll put our contact information and links to our websites below so that you can reach out to us anytime.
All right. Thanks, everyone.
Thanks. We'll see you next time.
Bye.